Hello fellow traders. I wanted to create a follow-up of the video I created a few weeks ago dealing with the basic realignment and rules, where we took a selection of 3 timeframes and we applied these rules in a, I did it in a PowerPoint drawing like a child and all that, but I wanted to do it now on a live chart and applying the basic rules, how the trend line breaks create potential imbalances, how the opposing imbalances are eliminated, and how to score the level and its accomplishments. And I think that that initial video together with this one should give you a very global understanding of how the rules work, how to apply them, and as per these rules are created and respected or eliminated. So without further delays, let's start by going through a live analysis done on Kiwi dollar. But first I want to show you a couple of slides. The statuses of an imbalance. We are gonna go through these over the analysis in this video. So there are 3 statuses. An imbalance, always while it's being created, it is potential. Every time there's a trend line break, it is a potential level. It needs to be confirmed as an imbalance, and the only way we can confirm it as an imbalance is by having consolidation away, which is compulsory. 2-to-1 imbalance, risk reward, it's something arbitrary. Our trading plan should state that for me it's 2-to-1. For the basic rules, it's 2-to-1 imbalance, twice the width of the basing of that potential imbalance. You could have on your trading plan a 3-to-1, 1-to-1, or 4-to-1. It's up to you. But this one, consolidation away, is compulsory. Okay. And then once the level is confirmed, we need to know if that level is tradable or not tradable. We need to pass those levels through the filters to filter them through the trend and location and all that. So those are the statuses. On this second slide, we're going to go through the basic scoring of an imbalance. So we're going to have 4 main features for an imbalance to be scored. And they are quite different. The first one is the level scoring. We know that we score the levels by itself, what the level is made of. Candlesticks, bearish bullish engulfing patterns, time of the level and that. So we need to see if it has a good departure, strong departure, very strong with a gap up or down, if it has ESC candles off the basing, if the departure is correct or not, if little time at the basing, more than 6 candles is too much trading at the area, if there's a risk reward and all that. Freshness of a level, that's the level scoring by itself, by taking into consideration only the structure of a level. That's the level scoring. But we've got more scoring. A level needs also to be analyzed taking into consideration the accomplishments, its accomplishments, what it has accomplished. Has it removed an opposing area? Has it broken a trend line? Has it accomplished both things, removing an opposing imbalance and or a break of the trend line? Has it removed a higher time frame area of imbalance? For example, we are looking at a daily area of supply, and that supply area takes out on a daily, takes out a weekly and a monthly area of demand. That level has accomplished something very big. A small one accomplished a big thing. Then we need to filter these levels and accomplishments and put that level into context, where it is located and the context. If it is nested within the higher time frame area of supply, if it is not, and if it is the higher time frame area of supply or demand, is that one area correctly scored as well? So, but location is where that level is located and the context of that level, if it is nested within higher time frame areas or not. And the last one, but not the least, this is very important, is the trend. Is that level, does that level go with or against the trend? Okay, so if it goes against the trend, it is a counter trend level. Are you allowed to take that one? Is that on your trading plan? You should know that. Okay, you should put all that down in your trading plan. So having said that, let's go and take a look at one analysis. Okay, let's do a top-down analysis. So, and we'll see how we apply the realignment rules we see the range, how high, how low. We will see how a level becomes from transforms from a potential imbalance to a confirmed imbalance and a tradable or not tradable imbalance. And we will also look at the level scoring, what it has accomplished, where it is located, and if the trend goes with you or not, and what happens when the trend is consolidating. So I have chosen one out of many instruments, so Kiwi dollar, one of the majors. So let's take a look at this one, and we're going to do a top-down analysis down from the monthly to the daily. So let's take a look at it. We start with the monthly chart. Okay, so we'll start from here, for example, so we can detect. Well, no, we'll start from here, from the top, and then we'll have to look at these areas to know if there are imbalances there or not. Okay, so what we have here is this. So one sec. Let's use this one. Okay, so we've got here. This is two valleys. Okay, this one and this one. This is the all-time highs. So this is supply by itself. Why? Because there is nothing else above price. So it has to be supply. Okay, this over here, okay, is not demand, even though it is all-time highs. This is not. This is the area of supply that needs to be eliminated, and it was eliminated by this imbalance. This one did not consolidate away, and consolidation away is required. Okay, it didn't consolidate away, so that is not demand. Demand is this one. Why is it demand? Because we have here this supply trend line break connecting the latest two valleys. One valley, CP, 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 and there's another valley, and this is a CP. So trend line break, this area was the one responsible for taking out that area. So that's what we end up with. Okay, so if that trend line is break, we've got something called nested levels. And this area over here, when we tested that area on the monthly, when it dropped, it accomplished nothing. This one, it accomplished nothing, didn't remove anything. So a retest, this is a retest, so we expect bigger penetrations of those areas. But sometimes the retest accomplish something like breaking the trend line and removing opposing areas of demand. So that one at the top here is a bullish bearish engulfing pattern, so we would edit this one, select no. Okay, and now we can extend it to the origin of the move here, the retracement. So there it is. So we've got a level on top of level, and okay, this one is the retracement that caused the break of the trend line with one or more full candles, open, high, low, and close. We've got all this that we have here is what confirms that level of supply. Just one is needed, but all this is a consolidation away. So we had this level of demand that was tested once, twice, third time, and on the third time it broke. So it broke here, right there. So we look up and left, and we stop when we see a peak or a CP. This is a peak because it's a rally based on a drop. So that is the level, as the rules say. We take a look at, we consider the first candle is being engulfed, and then we look like we see another candle, so we choose the open or the close of the farther away to the left candle, the base. This is not a basing candle, so we don't consider that as part of the engulfed candle. Okay, so we now know that that level of demand tested several times has been taken out. Okay, so that leaves us with a monthly area of supply that's being tested. So in order to draw a descending trend line, we've got to connect the latest three CPs or two peaks. This is a peak, this is a base, drop, rally, drop, and this is another peak, one peak and two peaks. So we now connect these two. Once this is broken, we've got an area of demand. which one do we get? This is not the area of demand because these accomplish nothing. We retest the trend line and doesn't break it. A close above does not mean the trend line is broken. We need consolidation away, full candle like all this, open high along close without touching the trend line. Okay, so all those candles over here are the consolidation away. So the level is created at the break of the trend line, and that is the level. That is a harami. At the demand areas, at the levels, we've got four potential patterns, candlestick patterns happening. For demand, we've got haramis, we've got bullish engulfing patterns, harami here. We've got piercing patterns, we don't have his one of piercing patterns, or morning stars. And for supply, we've got bearish engulfing patterns like this one. We've got haramis like this one over here, and we've got a dark cloud cover like this one, or evening stars. So we've got engulfing, haramis, piercing, and morning evening stars. Those four are the most classic and the ones you should study. So those are the ones. So now we've got a monthly area of supply and control. So we leave, this is the trend right now, okay, on the monthly. It's broken right now. So now this is a monthly area of supply and control. We can connect now, we've got a peak, valley, sorry, another valley, another valley. So we can connect now the ascending trend line again. But we've got a problem here. Many will think that now we've got an uptrend, but an uptrend is defined as per the rules using supply and demand imbalance by areas of demand being created, unrespected areas of supply eliminated, removed, taken out, deleted, wiped away. So in order to have an uptrend, we need opposing imbalances to be removed. Otherwise, this is just a trend line connecting two valleys. We could connect these two as well, okay? But this one is tricky over here, but it doesn't matter. We have demand defined as areas of demand created and supply being respected. For an uptrend. For a downtrend, supply being created and respected, demand being eliminated. So we need to assess that every single time. So we now know that this is supply and this is supply, and we now know that this is demand. So if we were to be in an uptrend, we would need supply to be taken out. That area of supply that took out this area over here we saw before, over here, has not been eliminated. So even though we had an ascending trend line, we don't have an uptrend. It is not possible as per the rules. This is just bearish consolidation. And if we draw these kind of trend lines connecting the latest two peaks, valleys, or CPs, this is only used for confluence. What do I mean with that? That if the trend line is broken, we will obtain here a potential imbalance on the monthly, and then we come here to the slide, a potential imbalance. Every time there is a trend line break, there is a potential imbalance. It's like here. That was a potential imbalance. Once we get the consolidation away, the risk reward and everything, then we go to the next stage. It is confirmed. And once we've got the confirmation of level, we need to pass that level through the trend filters. And the range, which is high or low, is all-time highs. So now we don't have demand until down there. Lots of room. We are allowed to shoot from up there at the top of the consolidation range. Okay, so that's how this status of an imbalance is assessed: potential, confirmed, and tradable. Now price drops, create all this, and now we have monthly supply zone. So this trend line is used as confluence, so that if the trend line is broken and we get a full candle closing away from that area, this will be a confirmed imbalance. Will it be tradable? No, it will depend on the bigger picture trend, which is down. Okay, so we'll take a look later. So this is a potential. We shouldn't even draw it. And if we do it, we should add some text here, potential or something. Sometimes I do forget about it. Okay, or here at the rectangle description. Okay, something like that. Or you just do many times do this. I just draw an ellipse. Okay. So I know that's something I don't want to go against it, and it is a potential area of supply. So we've got that. So the analysis would end up being like this. Uh, this I will make it one line thick, otherwise it will not be broken. Okay. So we've got a monthly bearish consolidation. Okay, so this is what we have right now. The monthly supplies in control no longer allowed. Okay, we've been talking about this for quite some time. So this is how you get there. So now this is the monthly. Do we need to make a top-down analysis from down from the monthly? We need to decide 3 time frames. Our sequence right now will be the monthly, the weekly, and the daily. So this is the monthly. Now I need to switch off to the weekly analysis. Okay, we need to make an analysis for all these 3 time frames, and at the end of the whole process we will get an answer. We like it or we won't, but it will be the answer. So on the weekly chart, we have all this. Starting from here, okay, we've got here price dropped. From the top, we had these 2 trend lines that created demand. Since demand was created over there and removed, there must be something that took it out. Watch that one. Watch that one. That was the previous one. So that's what we get from the top. Probably there was an area of demand here, like as you can see here, with this area of demand that was eliminated also by that one. So the accomplishments for that level are very, very high. 2, I mean, it broke the trend line and also removed that area of demand. That's what we have there. Okay, on the way down we continued to drop lower, like here, over here. Okay, and that one level over here is connected to this level over here, I believe, and even this one over here after the trial and break. So that level was eliminated by that one. So that is supply as well. So if that is supply over here, then these rally in price over here, rally based consolidation away. This is demand and has been tested several times. So we expect bigger penetration. This is what we have right now on the weekly by looking at the chart like that. So we also have now that we can connect this valley. This is ACP. We've got a valley here. We now can connect this trend line. So at the break of that trend line, we obtain a weekly area of supply. A very engulfing pattern, and that's what we got. Now we edit the top one, set it to no. I don't know what happened here. It's an old indicator, I think. So no problem. So that's what we get here. Now we get these shooting star. We've got this bearish, strong bearish engulfing pattern. When we have these bearish engulfing patterns, so why we usually have a wow short on 1 time frame lower or a daily area of supply, 1 time frame lower, which is a weekly. So we should have an area of supply at the top. So we've got now the weekly area of supply. This is area has been used up, so probably price will continue dropping lower. See, this is an inherited level. We're not going to go through that, but this is the next top. Okay, so we have room for price to drop down there. We don't want to go against that. So this is what we have. So we have now that we have added the previous analysis, the lower time frame sequence, the middle time frame sequence, we've got a wow short. I am currently doing a very, very serious test. I started a few days ago, and I want to test all weekly wow on the majors. I've started with the euro, we'll proceed with the pound, the kiwi, dollar CAD, dollar yen, and I want to get a number. Okay, so far I've got very nice extra clues as to when we can sort of tweak the rules and when a 2-to-1 imbalance is not needed, and we could even work with a smaller imbalance. So like this one over here. Okay, so we require confirmation. That's another thing, but it's not a part of the video. I'm working on that, and I will have some numbers maybe in a couple of months that will give us more confidence on these kind of trades. So this is what we have. We've got that one over there. On here, we've got a peak, rally-based drop. We go left, is CP, peak. So we connect this and we obtain these very over here. We would have to take the whole thing here. Okay, could take this one over there, but it's we have to cover the lowest lows. So that is the area of demand over here. So this is demand. Price has a lot of room to drop, and there is a void to be filled if the price continues to make a lower low, where we expect a lower low. Why? Because this area over here has been tested on departure, tested with a lower low, we expect a lower low, and even removal of that area. And we have weekly and monthly areas of supply in control. So we've done the weekly analysis, and now in the weekly analysis we've got bullish consolidation, as you can see, which is what we need to see in order to see a wow. Okay, so we're going to go through the process of scoring the levels. Okay, so now we know the potential, confirmed, tradable, and all that. So now this is what we got here. We had one valley here, makes a higher high, okay, and this valley over here. So we must connect the latest two valleys over here. Okay, we get this area over here, supply that works, okay, and now tested over here twice, so we expect bigger penetration, and that was the level at the top over here. So this is what we had. But price is on the weekly area of supply, and we can also draw now. Previously there was a trend line like that. Okay, this is why it was latest two wasn't broken, but we also had here these two. Okay, we had the valley, another valley breaks, and we create supply. If that supply has been eliminated, and this is how it goes, the rules, okay? Eliminated, as you can see, was pierced here, traded through. So that means that the imbalance happened over there. We have to locate the origin of the imbalance. So if that area was the imbalance, dodgy, not good quality, so then has been broken by right here. We go up and left for supply to look at supply, and we get this one here. We get that one there. So, but that one there has already been eliminated. So we go down and left. So we look at this one level, which is very bad base, level on top of level, and that is the one holding. So we expect bigger penetration and or removal because of that. So since the trend line was broken here, okay, over there, and this was supply, this supply has been eliminated. There, we go down and left, and we stop when we see a value or a CP. So we've got the level. So that one structure, as you can see, is not good at all. It's been eliminated. So now that that level has been eliminated, we've got supply at the top. Okay? But not only that, that level has accomplished something else. We had an ascending trend line connecting the latest two peaks. Valley. We got the famous W. So that level's accomplishment is double. It removes an opposing area and breaks the trend line. Okay, so we get to get this right now. This is what we end up having when we do the top-down analysis. So when we score these levels, now we need to take into consideration several features. While scoring the level, we score the levels by itself, by the levels features like departure, freshness of the level, time at the base, compression at the level, good base or no, risk reward, profit potential, and all that. That's the level scoring. Then we score its accomplishments, then where it is located and its context, and then if it goes with the trend. So some tips here. We've got monthly area of supply, but monthly area of supply is now the trend line is broken because we have the trend line connecting this peak with this peak broken, creating monthly wow long. The structure is bad, but it is a wow long nevertheless. So we've got monthly supply and control. When, and this is a tip I've been discussing many times, but this is a beginner video. It will be one of the first lessons. But I just want you to have an overall understanding of how this works. So some of these things are very advanced, so you need to read the lesson a few times. So this is what we have. When you have the monthly one time frame consolidating, being by breaking the ascending trend, the descending trend line, or the ascending trend line, it usually, not always, but most of the time, is a reaction to a previous imbalance on a higher time frame. So when you have the top time frame of your sequence, we are using right now the monthly, the weekly, and the daily sequence. You could be using the weekly, daily, and the 4-hour. As I described in the first video, the sequence and realignment rules. If the middle time frame of your sequence is out of alignment, you can take control trend and all that. But in this case, the top one is out of alignment. When the top one is out of alignment, it's probably because a higher time frame area of supply is in control. Okay, so in this case, since we are using monthly, weekly, daily, you could have a peak at one time frame higher. If you were trading weekly, daily 4-hour for a swing combination trading sequence, you could look at the monthly because it's one time frame higher than the highest time frame in your sequence, which would be the weekly. But in this scenario, we are using the monthly, the weekly, and the daily. So we need to look at the 3 months area of supply, 3 months chart, because we are down 3 months supply. So once you get the top time frame of your analysis out of alignment, it is a good idea to look at one time frame higher and see if it is a reaction to a previous and higher time frame area of supply in this case, because that could give us a clue on what to do. Okay, so when we look at the 3 months chart, okay, this is what we got. Okay, we have that there was an area of demand that has been removed over here, rally base. It didn't accomplish anything here. This was the previous trend line over there. So that created this area of supply that was eliminated by this area of demand. So this is what we end up with. This didn't make a high, so I couldn't connect this with this. Okay, on the monthly we could see it. So that area of supply has been eliminated by that one. So we end up with this area over there. 2 candles there at the base. A CP. So that's what we end up with. One sec. Okay. So it means that that area of demand on the monthly is nested within a 3 months area of supply, which is from here more or less to here, a little bit higher till there. Okay, so now that we look at the monthly, we see that that was a monthly area of supply nested within a 3 months area of supply, having eliminated one area of demand on the 3 months. So these, now when we look at the levels, when we these monthly, let's score at the level. Let's score the levels. Let's take a look at this. The scoring of the level. Okay, we have to do the level scoring. So first of all, we need to score the level by itself. What are the features of the level? So the basing, time at the base, very short. Departure, strong. Freshness, fresh. That's really, profit margin potential is huge. Okay, so level, this is good. Level scoring is good. Accomplishments. What it has accomplished. Has it broken a trend line? No, it hasn't, but it has removed an opposing area of demand. Tested several times, used up. So accomplishment. It has accomplished something. It has removed an area of demand on the monthly. And this was also a 3 months area of demand. So it has also accomplished a 3 months area of demand removal. So accomplishment is good as well. Location and context. Is it well located? It is nested within a higher time frame area of supply? Yes, it is. It is a monthly area of supply nested within a 3 months area of supply if we were to look at one time frame higher of our trading sequence. We don't have to, but it's a good idea to do it. So location and context is good. What is the trend here? The trend is consolidating, but since we are high in the range, location high, and lots of room to drop, and the bigger picture's down, it's bearish consolidation. Remember, bearish is consolidating, is trying to, this is correction. This is impulse, correction, impulse, correction, impulse, and now this correction is taking much longer, but it's a correction nevertheless. Okay, we are in a bigger picture downtrend. No single area of supply, this is the closest one, has been eliminated. So we are not in an uptrend. We are in a downtrend respecting areas of supply. Okay, new areas of demand have been created and areas of supply respected. That is not a picture of a downtrend. It's a picture of a consolidation, but it's neither a picture of an uptrend, because in an uptrend areas of demand are created and supply are eliminated, but this is not the case. So we have a bearish consolidation, we've got a downtrend. We are now correcting, reach a monthly area of supply, and reacted to that monthly area of supply nested within the 3 months area of supply. So now we go to the weekly chart and we score this level. Okay. First of all, we start with the scoring of the level itself. We've got the basing. Okay, it's not that good. The departure is good, but it didn't accomplish 2 to 1. So that one would require confirmation as long as there are no new rules. But its level score is like medium. Okay, we will require confirmation, which is already happening. Accomplishment, what has it accomplished? It has broken the trend line, and if it continues to go lower, probably will remove something else. So accomplishment, trend line break. Location and context. Is it well located? Yes, it is well located. This area of supply is nested within this area of supply on the monthly. So weekly inside the monthly inside the 3 months chart. Let's take a look at this multi-chart. So this monthly is, weekly is here on the monthly. It's happening right there. So when we look at it, okay, again, accomplishment, good. Location, perfect. And the trend, we already know that. The trend is with us. We've got bearish consolidation on the monthly with the monthly location and context with us, and accomplishment and everything with us. So we can take shorts. Now it's the bias to take shorts by scoring this level. Okay, so let's take a look now at the daily chart. On the daily chart, this is what we got now, a new area of supply being created. So we also apply the same concept here. We've got level scoring. We score the level by its features. Base, good, little time at the base. Departure, super strong. Freshness, fresh. Okay, and original is not a reaction to anything else. So almost did react to the top level. Depending on the broker, you might have a non-original level, but right now it is an original level on my broker. So departure good, freshness, risk reward potential, that's awesome. So score, this is good. Okay, accomplishments. We already know that it removed this area of demand and it broke the trend line. It will break the trend line. Okay, it is now a potential, it is not a potential level, it is confirmed already. Okay, why? Because it breaks the trend line, but it also now to remove an opposing area. So now it's confirmed to 2-1, consolidation away, etc., etc., etc. So that one is already confirmed. Is it tradable? We will see now when we end up our scoring. Okay, so accomplishments, demand area eliminated, and trend line will be broken at the end of the day. This will be the candle that consolidates away. I don't think price was going to retrace all the way up there in today's candle. So we take for granted that's going to happen. If it doesn't happen, we will change the analysis, but I don't think it's going to happen. So location and context, good. It is nested. Why? Why is it good? Well, I mean, the composition is good, level scoring good, location and context. Why is it well? Is it good for location and context? Because this is the daily area of supply. Okay, it's nested within a weekly area of supply, nested within a monthly area of supply and a 3 months area of supply. If you look at the 3 months chart, taking into consideration the tips that I gave you before when the monthly top time frame of sequence is out of alignment. So we've got a very good level of demand supply up there whose accomplishments are great, location is good, level scoring is perfect, and now the trend. We already know that we have a bearish consolidation on the monthly high and the range, so we are allowed to take shorts at the top of the range. It is well located within the monthly, weekly, 3 months area of supply, strong imbalance, everything is good to go if we want to take a short. So, but things could change. I mean, not change, but it could continue lower. So this could be the last pause before these all the buyers here are eliminated on the demand area. So this could be a drop-based drop and then retracement on the supply, and we take a short. Or we could have a rally over here to this trend line break retest and create a wow on the 4-hour, and then from there shorts. Or rally doesn't give a confirmation and it creates a new peak, and then we would connect trend line like that, and a new area of supply will be created, so we would trade the pullback. Those are the possibilities if price doesn't reach that area of supply. So we end up, if we make a lower low here, then we will have to connect these two peaks. Okay, this is a peak, makes this is one peak over here, makes this low. So if it makes a lower low here, we would have this shape. Okay, so we would connect the latest two. That's how it works. And we would have a downtrend on the daily with a weekly area of supply and control, monthly area of supply and control, 3 months area of supply and control, and a lot of room for price to retrace. Okay, so this is how it works. This is an area of demand over there. It's being eliminated already. So we expect price to drop all the way down there. But we never know. So this is what we have to do every single time we look at a chart. We do a top-down analysis, okay? Top-down analysis, and we score the levels. We see locate potential levels that are later on are confirmed, and then we decide if they are tradable or not, depending on its scoring. We score the level by its features, the little time or the base, the time at base, the departure, risk reward, profit margin, the freshness of the level or originality of the level, and then we take a look at the levels and see, look at the accomplishments. If we have removed an opposing area of imbalance or one time frame area imbalance, or it broke a trend line, or it did both, then we place that level into context. If it is well located, if it goes with the context, with that location, with the downtrend and all that, or uptrend, and then we take into consideration the last variable for making a decision if a level of potential imbalance is tradable or not, and that is the trend. Is the trend with us? Is it high in the range and all that? Yes, in this case we have the trend line, the trend down, so the scoring is good, so we take shorts on the new levels that are being created. This is the first one. So this is how it works. We have to do this every single time we do analysis, but you don't have to do all this every single day. Once you've done all this, you already know what's going on. So if you trade the monthly, weekly, daily, one candle at the day. Tomorrow is like that, nothing. Tomorrow is like that, nothing. So, and then after tomorrow, 3 days later, on Wednesday, you've got that. Probably that will be supply, and you will trade the retracement. Okay, so one candle, one day, one decision, but everything else will stay the same. You know that you are high in the range on the monthly and the 3 months chart, high in the range on the weekly supply with a bearish engulfing pattern, new wow short here, new daily supply that remove this area, etc., etc., etc. You know you have to short the market. Don't look at taking longs because you are assuming that price is going to retrace to your short. That will be knowing what's going to happen. That nobody knows that. So bear that in mind. Hopefully this video will have explained some of the doubts that you have. This is a sort of a beginner's video and advanced because it takes into consideration every single rule. So this is more or less the strategy. Now looking at the chart, what you have to do every single time. Okay, if this is unclear to you, if the level has not accomplished anything, or you are really doubtful about what a level has accomplished or its score, do nothing. wait, do nothing. Because we have three trading decisions when we trade. We can buy, we can sell, but we often forget that there is a third decision we can make. And that decision, it's funny enough, is the most important decision, and that is doing nothing. So trading is about doing nothing, but getting ready, being alert to pull the trigger when that nothing becomes something. Thanks a lot for your attention. Hopefully this will have solved some of your doubts. Enjoy your day and your week. Thanks a lot. Bye bye.